Want a Lambo in Bali? Or just to stop your account from bleeding? 90% of you will fail. And it's not the market's fault, it's your sabotaging brain. Welcome to the cold, hard reality. Whether you're in New York trying to be the next Wolf of Wall Street, or in Jakarta looking for financial freedom with a boba tea in hand, listen up. The market is a machine designed to transfer money from the impatient to the disciplined. Behavioral science doesn't lie. Research from institutions like MIT and Birzeit University shows that the difference between the trader who buys a private island and the one who moves back into their parents' basement isn't a secret indicator, it's psychology. Today, we're dissecting 10 rare mindsets, validated by science, that the legends use, and you've probably never heard of. You just spent $500 on a Ninja Moving Average course. Congrats, you just bought 10% of success. According to legendary researcher Dr. Van Tharp, the trading process breaks down into 3 categories: 10% strategy, 30% money management, and a massive 60% psychology. The rare mindset here? Stop chasing the perfect setup. Legends know that a mediocre strategy in the hands of a stable mind makes a fortune, but the best strategy in the hands of an emotional wreck leads to total bankruptcy. While you're jumping from indicator to indicator, the legendary trader is busy fixing the operator behind the screen. Scientists developed the TESI, Trading Emotion Stability Index, to measure how emotions interfere with performance. The discovery was clear. Traders with low TESI, meaning high emotional stability, make significantly more rational, confident, and stable decisions. Most beginners trade like they're on a first date. They panic at every wrong move. The legendary mindset is robot mode. If your heart races every time the chart ticks, your TESI is too high and you are prone to errors. To the greats, a $10,000 profit and a $1,000 loss should feel exactly the same. Nothing. This error makes behavioral scientists cry, the disposition effect. It's the biological urge to sell winners too early and hold losers way too long. Why? Because taking a profit gives you a dopamine hit, but taking a loss forces you to admit you were wrong. Legends flip this. They cut their losses fast and let their winners run. If you're hoping a losing stock will come back to break even just so you don't feel the pain of a loss, you've already lost the game. In movies, successful traders are sweaty guys screaming into phones. In reality, science shows a significant negative correlation between stress and rate of return. Stressed traders make emotional hijacking errors and become more aggressive in a way that destroys wealth. The research proves it. Those who make the most profit are usually the ones feeling the least stress during the trade. If trading isn't calm and almost boring, your position size is probably too big for your nervous system to handle. Seeing that guru on YouTube posting huge daily profits is destroying your account. Upward social comparison causes retail traders to take excessive risks and feel miserable about their own performance, even when they're actually winning. The legendary mindset: ignore the noise. The only chart that matters is your own equity curve. Studies show that traders exposed to other success lose satisfaction and start chasing unrealistic returns. In trading, silence and focus are literally gold. Accept this. You have no control. The market has a component of randomness and noise that can trigger an unpredictable black swan event at any time. Beginners try to be right about the future. Legends try to be statistically profitable. The rare mindset is treating trading as a game of probabilities, not certainties. If you can't accept that you can lose even after doing everything right, the market will break you just to teach you humility. Forget the myth of the aggressive extrovert. Studies suggest that successful professional traders tend to be stable introverts who are open to new experiences. Why? Because introverts are often less prone to the herd mentality.
They don't need validation from a Discord group or a WhatsApp forum to press the button. They do the research, follow the plan, and don't feel the need to win an argument against the market or their peers.
Just lost money? The human reaction is revenge trading, becoming more aggressive to get back what the market stole from you. The rare mindset is realizing the market doesn't know you exist and it owes you nothing. Legends see a loss as a simple business cost, like rent for a shop. Trying to get revenge on the market is like trying to punch a hurricane. You'll just break your hand and your bank account. Why do 90% lose? They have no risk management. They risk 50% of their account on one feeling. Legends operate with a don't die mindset. This means strict position sizing and non-negotiable stop losses. If you don't protect your capital with discipline, you aren't a trader. You're just an involuntary donor to the big banks. The silent killer of accounts is overconfidence bias. A beginner wins 2 trades and thinks he's a genius, leading him to overestimate his skills and stop researching. Legends are eternal students. They know the market changes and that their own cognitive biases are always trying to trick them. Confidence kills. Curiosity and self-awareness pay the bills. So, do you have what it takes, or will you remain part of the 90%? Science says trading is a skill that can be learned with proper instruction and practice, but it requires a level of discipline most people simply don't want to have. Don't be the trader looking for adrenaline. Be the one looking for statistics. If this reality check helped, hit like and subscribe. Or don't. The market doesn't care. And honestly, my 60% psychology doesn't either. Trading involves risk. Don't use your rent money.